Good morning. I'm Jill Malandrino, Global Markets Reporter at Nasdaq, and joining me is Steve Lipper. He's the Chief Investment Strategy at Royce and Associates. Thank you very much for joining me for this edition of Trade Talks. Very special one at that with Eclipse Monday.
Yeah, great to be here today.
So we're going to dive into the world of small caps today, and we want to get your perspective as a small cap manager and talk about the inefficiencies that exist in that market. So I'm going to let you run with that.
Yeah, so two things are probably useful to know. There's roughly a third of the number of research analysts that cover the average small cap stock as the average large cap stock. So you might think, wow, there's some inefficiencies with that. But even more so, there's hundreds of small cap stocks that have one or zero analysts covering them. So you're probably going to have more opportunity to identify mispricing in the small cap world than in the large cap world.
Well, we've seen a lot this year where small caps have been underperforming other classes, and we saw the reverse last year. Let's talk about the fundamental environment for a bit.
Yeah, so really 2017, a mirror of 2016. 2016 was about sort of small cap over large and value over growth. 2017, really the exact mirror of that. And so our perspective, people ask us, well, which do you think is going to be the continuation of the trend? And our view is that it is going to be small cap and it is going to be value led, but with the nuance that we probably want to have some exposure to cyclical companies that participate outside of the US. And so there's one of the big myths, is that while it is true for all small cap stocks, it's about 19.8% of their revenue comes from outside of the US. There is a wide variation. So some small cap companies have 30, 40, 50% of their revenue coming from outside of the US, and that's probably where we see the opportunity today.
Well, small caps especially, they tend to be more sensitive to the movement in the dollar as well. That would be correct in thinking?
Yeah, so it will depend. You're right. So for those companies that are exporting themselves, that's certainly sensitive to the dollar, or when they sell to somebody as a component that's exporting, that's true. Where they're less sensitive would be if they had sort of facilities in Europe or in Asia. There were local facilities.
Well, tell us about the fund more specifically and specific to that investment strategy. Some sectors that you think are hot and some that you think might want to stay away from in the small cap world.
Right, so the ETF that we are sub-advising for Legg Mason is the Legg Mason Small Cap Quality Value Index, or ETF. And so we're looking for that intersection of quality and value. And you often find that in cyclical companies or companies that have some exposure to cyclicality. So what do we mean by quality? We define that very precisely as those companies with high returns on invested capital that have been able to keep that over the years. And then value for us is free cash flow yield. So the intersection of that, there's a couple places that we're finding that more today. Some of that is electronic equipment. Most of what we're seeing is the tech build out, both in and outside the US, has a long way to go. Our small cap companies are suppliers into that. So you hear about all the growth of cloud computing. Well, there's a lot of component companies that need to serve into that. We also see that factory automation outside of the US, particularly in China, is still at the early stages. So a number of the companies that supply into that are also attractive to us.
It's really interesting to see that the tech sector, regardless if it's small, mid, or large, seems to really be dominating the space everybody wants to be in.
Yeah, the areas that we're going to be to try to get also that value component are going to be probably more tangible tech components or things like that that are going to be swept up along there. We will tend to be less in our strategies and in this ETF in the software or in the internet because those will be a higher valuation. So other people can do that. We just tend not to go there.
And let's talk about overall market.
Yeah.
We had a little bit of blip in the radar, some volatility return to the markets over the past couple of weeks.
Yeah.
Do you think for the remainder of the year as we go into Q4 that this was just a blip on the bull's radar, or there could potentially be somewhat of a composure change here?
Well, we think we're overdue for an increase in volatility. So if you look at the last 20 calendar years, 18 of the 20 have had at least a double-digit dip within the year. The average decline in small cap is about 14%. Up until recently, it's only been about 5%. So we have been saying and building some cash in our portfolios, anticipating some better prices to go and purchase at. However, we will be buyers of that dip because we believe we in small cap are at the early part of a multi-year cycle. Here's the key insight that most people miss about small cap. The small cap cycle is new. We just had a bear market which ended last year, in our view, in February of 16. So we're only a year and a half old. So when people talk about an aging bull in terms of the large cap, that may be true, but small cap we think has room to run.
It's an interesting point. Well, thank you very much, Steve, for joining us at MarketSite. And traders, as always, thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.